Hey, this is Sasha, and I want to thank you for joining me here in another option lesson that we have. Today I want to talk about how to create an iron butterfly, basically how to create a butterfly using an iron condor. So we're going to create a butterfly risk profile with an iron condor. And there's a couple of advantages and interesting things to do with this if you want to do it this way, but really the core difference is not really a big deal, but if you like setting it up one way or another, I just want to show you another setup. So it could be something interesting for you. Before we get started, I do want to remind you that our passive dividend investing course, it is the last day to purchase it. 14 modules over 12 hours, a lot of study guides there, and you can see about 15 hours, 18 minutes to go. So when that timer runs out, the price switches right away and the discount is gone. So make sure you get it before the timer runs out because it's set automatic right there. So when that switches, the discount, the sale is over. Now in this course, as you take a look at this course, you do get slide handouts right here once you log in. And you can look at some of these videos, introduction videos about 32 minutes long. Then you got how dividend investing works, about 40 minutes long, 53 minutes long, an hour long. You know, so these aren't 5-10 minute clip videos here or like some smaller courses. This is an in-depth, massive study material. So if you're interested to really get into the nitty-gritty and learn things in depth, that's the type of courses that we produce. So anyway, looking through this, you can see 41 minutes, 20 minutes. Here, this one, I'm not even sure, about an hour long. This is weighing your risk to reward profile picture. So you could see we get into actually the screens, managing your portfolio, about an hour and 23 minutes long. So we talk about you know, going on screen, going on paper right here that you can see, drawing things out for you, when to add to positions, using options even to hedge these positions, even if you're a passive dividend investing, and much more. So a lot of things on there in this course. Definitely check it out if you're interested in learning more about how passive dividend investing works. With that being said, let's take a look at a trade setup here and get things going. Again, all of these things can be found on our main website, tradersfly.com, including these videos, or rise2learn.com is where we have all the courses. Rise, the number 2, and then learn.com. So here, as we go into this trade setup, take a look at the butterfly. This is the butterfly we're going to set up. Pretty much this is what it's going to look like. So let me start this from scratch and show you how it really works. So here we have Amazon. And if we take a look at the Amazon chart here around 1493, and let's say I'm projecting a move down to about, let's say 1400. Okay, so I could set this up in a couple of ways. And I'm just going to use the 49-day option. So here, let's say 1400, I'll go ahead and right click buy a butterfly. Now you can see it's all puts here. These are all puts. So I have this 1400, I have 2 contracts that I'm selling, and then I'll buy my wings, let's say about 30 points out, maybe 40 points. Let's see here. Okay. Excuse me. So we analyze the trade right here. Here is our butterfly setup. So you can see our price, our current price is right here. Okay, as this moves, you can see we have this little curvature. Now the most that we make is right here at this tip. Usually doesn't pan out and it doesn't work out. But if you look at how this white line really moves, you can see it goes outside the range. So as time expires, you can see that we get even all the way over to about 1270 where we're still kind of profitable. So right there, so after a few, let's say about a month worth of time, you can see I can make about $290, okay, but I'm risking only about $400. So it's almost a 2-to-1 risk to reward ratio, or 1-to-2, because I'm risking 400 to potentially make about 200-300 if it moves in my favor. Now, if it does kind of get down, even overshoots and then slowly comes back, this graph can continue to really explode right here. And that's kind of the power behind it. So really, you could be up $1,100 right here towards the end by only risking about $400 in capital. And even if it's not working out and the stock kind of hangs out, you can see you're still at this point, if you get out of it early enough, you're only risking about 177. And at some points, actually, even if it hung out here for a month and didn't even go up, you're actually just get out at maybe 50 bucks where you're profitable, kind of like a scratch trade. So that's kind of the way the trade works. Now, adjusting a butterfly is a little tricky for some people. They believe it's a little tricky, and they're more comfortable with iron condors. So let me show you how this works with an iron condor. So typically, when you set up an iron condor, it's going to be very similar. So let's say we sell an iron condor. Now, most people think of iron condors as, let's go into the call side. Let me just show you a quick little setup. They mostly think of them as, let's just do 10-point wings, and we'll go very wide out, 540 and 530, and then this one, go maybe 30. Actually, let's go even wider. Okay, so most people think of iron condors as pretty much looking like this, right? So you have kind of two verticals on each side. So this is what most people do to set up kind of an iron condor. Very different. You're trying to confine the prices inside this range, right? And then trying to get them to expire. Overall, the curvature still kind of works in the same way as a butterfly, right? You still have that curvature right there that works and functions with time decay. Now, kind of the main difference here, though, is you can see what really happens is you have these 2 points that are spread out, but what you could do is bring these points in to kind of the center, right here. And when you bring those in, that creates your butterfly. So let's take a look here. So we have the April, and basically the 1400 is what we want. So 1400 is the ones we sell. So watch what happens as I bring my put side to the 1400s, and I bring the call side that I'm selling to also the 1400s right there. And now what I'll do is, again, you can see it's slowly starting to come together because there's our point. Now I need to adjust these wing sides. So here, again, I'll go about 40 points out. So here we'll go 1440. Okay, and then the other one will go to the 1360. And you could see right there, it basically is the same profit picture. Now, because we're doing this before the market's open, in fact, it's actually 8:55 in the morning here Eastern time, the curvature may look a little weird because the prices are not in there right now and not active. So it may look a little funky right now, but overall, the profit picture, if you really look at it, is the same. And we have the same strikes. Now, the main difference, of course, is one, you have puts and calls, and the other you have calls or just puts. So you can see that on this one, the curve is a little bit set up okay, whereas on this one right now, just because the market's not open yet, the option prices might be a little bit skewed up until the opening bell here. But otherwise, it works in a very similar way. It's basically the same exact thing. And if you're wondering which one is better, not one is better than the other, but I find that some people, they actually like adjusting the iron condor butterfly a little bit easier, because then if something happens, well, what do? Well, what they'll do is they may move the call side right here. They'll take the call side off and move it over a little bit, so they start adjusting it that way because you can adjust the vertical. It may sound a little easier, right? Or the same thing, if it starts overshooting, well, you take this side off and then you'll readjust it by, putting on a new one further out. So that's one way to think about it. But otherwise, if you like to play with it with an iron condor, you can do so. Sometimes getting filled in it is also a little bit easier because maybe you're out of the money, in the money on some contracts. But usually if you're trading liquid vehicles, it's not a problem. Overall, it's just a different way to do the setup, just which one you feel more comfortable with. But I want to share with you this variation because for some people, the adjustment part makes it easier. Contract-wise, you're not paying anything different because here you're using 4 contracts, here you're using 4 contracts. It's just that this one is all puts, and this one is puts and calls. So, you know, which one is better may really just depend on your personal preference. There is a little more flexibility here, I'd say, with the iron condor butterfly, just because you could manipulate things a little bit differently. So let me show you what I mean by that. Is let's say I go this one with the put side and I go to 390, and this one I'll go to the call side of, let's say, 410. I could kind of widen that tent up a little bit. So I sacrifice some things, of course. There's no give me's in the markets, but you're starting to widen some things on your picture, right? So you get to play with it how you want to. So again, you can kind of skew it a little bit differently. Whereas with the butterfly, it's a little bit difficult to do this unless you start getting into kind of an unbalanced butterfly. But you could look at this as a hat trade, right? Instead of a butterfly or an condor, maybe like a hat. Anyways, that's kind of my take for you today. I hope you enjoyed this little video, show you just a different variation of how you can go ahead and set up another kind of trade. If you did and you want to see more videos like this one, be sure to hit the subscribe button right here, or definitely get on my newsletter list, which every Thursday I typically send out a newsletter to share with you any new videos that come out along with special announcements. And don't forget to check out the course, Passive Dividend Investing, because the sale ends today. Anyways, thanks for joining me. In the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you in the next video.